Hi, everyone, and thank you for joining us today at our session, The Road to Net Zero. My name is Kyle Harrison, and I lead BloombergNEF's sustainability research practice. So we're looking at the transition to the low-carbon economy through the lens of the private sector. And today I'm joined by two fabulous panelists. We have Marc Engel, who is the Chief Supply Chain Officer at Unilever, and we have Mindy Lubber, who is the CEO of Ceres. And so before I hand it over to our panelists, I really quickly just wanted to showcase a couple of numbers to highlight the magnitude of what the private sector can achieve on this race to net zero. The example I always love to use is a group that we call the Climate Action 100 Plus, and we'll hear a little bit more about this from Mindy later on. But this is a group of now just under 600 investors and asset managers that have pledged to get their portfolio companies to decarbonize. And specifically, they're focusing most of their effort on 167 of what they deem focus companies. These are the heaviest emitting companies within their portfolio. To date, 83 of those 167 companies have set a net zero target or equivalent. So they've pledged to reduce or offset their emissions at a level equivalent or greater to what they emit on an annual basis. And at BNEF, we've calculated that if all these companies were to go ahead and achieve their net zero goals, it would result in 8.3 billion metric tons of carbon dioxide being removed on an annual basis, which is 20% of global CO2 emissions. So we just heard from Mr. Gore just now about cleaning up our act. And I think the private sector is an excellent example of how we can go ahead and do that. But the challenge in this race to net zero is that with all these different corporations going out and every day setting new net zero targets of different shapes, sizes, and even names, it becomes difficult to distinguish a good net zero target from a bad one. And it also creates this huge opportunity for greenwashing. So for the first segment of this panel, I want to talk about what makes a good and ambitious net zero goal and what we can do in terms of standardization to boost the credibility of this race. So Marc, I want to start with you. So last year, Unilever announced a net zero target for 2039, which is 11 years earlier than most companies are aiming to go net zero as part of the Paris Agreement. Can you walk us through a little bit more about how Unilever formulated that target and why setting a target year 11 years earlier was possible?
Yeah, thanks very much, Kyle, and thank you for having me here. It's a pleasure. Look, we announced our net zero emissions by 39 target in June last year. And it comes on top also of two other science-based targets. A is to have no carbon emissions from our own operations by 2030. And the second one is to halve the total greenhouse footprint of our products across the value chain by 2030. And I think it's important to have those targets alongside of the net zero target. To your point of making sure that that it's actually a good net zero target. The significance of 2039 is really a response to the scale and the urgency of the climate crisis. It is to focus our organization that we have 2 decades to do it. And by the end of the next decade, which is 2039, we've got to get it done. It's about halving our footprint across the chain this year or this decade, and then doing the other half in next decade. We put a 1 billion climate and nature fund behind it, and we very much see 2050 as a deadline and not a target. And we feel that, maybe not everybody will achieve 2050. And as a corporation, we feel that, let's say, setting ourselves an ambition 11 years earlier is actually what is required, because this climate crisis doesn't wait and it knows no boundaries. So you either win together or you lose together.
Perfect. Yeah, no, thank you for the background. And I definitely want to hear a little bit more about that fund later on in this panel. But I love that point about kind of taking action now, right? Because when a company goes out and sets a net zero target for 2050, that doesn't necessarily mean that they're going to go ahead and enact change right away, right? So Mindy, moving on to you, Ceres spends a lot of time, working with corporations in the private sector to get the needle or get the ball rolling on, reducing emissions. Can you tell us a little bit more about what role your organization plays in this race to net zero?
Well, first of all, and thank you, and thanks to my colleague at Unilever, and I will say they are a leader in this space. Our job at Ceres, and we are an advocacy organization that works with business and investors, but we're not a business or an investor. Our job is to push and push hard to meet those scientific goals of addressing climate change. We've got an existential threat. It's not going to be fixed easily. We need the private sector, the public sector. We need every player on our planet to be acting. So when a company says, I'm going to commit to X, net zero by 2050, here's what we would say. And what we do say, that's great, but you can't start in 2043. You must have a short-term, a medium-term, and a long-term set of goals. You've got to be transparent. The public needs to know, your investors need to know, consumers need to know. This is a global problem that we're in together. So it is not just about bold, glorious, long-term solutions that may never happen, depending on a CEO could change. The leadership of a company may change. So right now, to assure that we're not seeing greenwashing, we have to see transparency. Companies need to disclose these plans. They need to be metrics driven with specific goals, short, medium, and long term. And no company actually will be able to achieve that without bringing in their supply chain. So they have to shape and support and incentivize all the small suppliers that work for them to help them get there. And let me say one other thing. It's very easy for a company to say, we're going to meet those goals by doing a lot of offsets. You know, our emissions will still rise, but we'll plant a number of trees. That's not good enough in this day and age. This isn't a numbers game, and can you just show something? It's got to be additive to the problem. So companies need to reduce that footprint absolutely as much as possible, which I will tell you Unilever did. If you need to buy some offsets, they need to be nature-based solutions that really are additive, that really are absorbing the carbon rather than just some gimmick for not reducing emissions more. So a big challenge, but we are seeing almost a mini revolution in corporate America and in the financial world, stepping up and owning climate risk as something they need to both deal with as a risk and as an opportunity.
Well, yeah, and let's talk a little bit more about the financial community here. So I gave the example earlier of the Climate Action 100 Plus, and all these investors and asset managers putting their weight behind climate change and getting their portfolio companies to decarbonize. Can you tell us a little bit more, Mindy, about Ceres' role in creating the Climate Action 100 Plus and how pivotal that group is to getting targets to set these goals? Because if you look at those 83 focus companies that set a net zero target, pretty much all of those targets came in the last 2 years, which is conveniently right after the Climate Action 100 Plus was formed, right? So, you know, that's not just a coincidence, right? There's actually investors making things happen behind the scenes. So tell us a little bit more about the role that that group has to play.
So you're right, it's not a coincidence. Corporations are driven by several things, by what their customers think, and that's going to play more and more a role as we go forward in the future, meaning we'll see people, I think, more so buying things from companies whose values they support. Employees drive behavior and practice at companies. A motivated workforce is one of the most important things a company could have, and being able to recruit the best and the brightest part of that. And people want to work for companies that are mission driven. But the third most powerful, or the third powerful force, and I'm not putting them in any order, are the owners of companies, investors. We brought together as part of Climate Action 100 Plus some of the largest investors in the world, the largest asset owners who invest in every company, every publicly traded company and every private company. Some of the largest investors like public pension funds, the California Pension Fund, $360 billion, the New York State Common Public Pension Fund, about $340 billion. And we've brought together others like BlackRock that manages $7 trillion in assets under management, and said they need to understand, and I believe they do, and more so every day, that climate risk is a financial risk to their portfolios. Their role in looking at, we started with the 100 largest emitters when we launched Climate Action 100 Plus. Who were the 100 largest emitters who were not moving quickly enough to address climate change? And that list grew to 160. But largely, it was their owners, their investors. With every company, we've got a team of investors that we bring together with the companies who negotiate, who look at how to bring their emissions down. And in fact, it is making a difference because investors speak with a powerful voice, and we've got as you said, nearly 600 investors, $55 trillion in assets under management, who are saying that the companies in their portfolios need to act. But let me say one other thing. Just getting a commitment is not enough. We will stay with those companies and keep pushing. This year, 2 years into our effort at Climate Action 100+, we benchmarked all those companies, meaning we dug deep, we looked at every single thing they're doing at climate, some of them quite formidable, some of them have a long ways to go. But this is about transparency. It's about making sure that people are not only talking the talk, but walking the walk. And we're seeing extraordinary progress. Enough, not nearly enough, and we've got a long ways to go. But when large oil companies start stepping up to the plate, and indeed they've got a long way to go, but so many of the other large industrial companies who are saying, we will reduce our emissions by 2050, but we'll start now, and we'll set goals, and we'll be transparent, that's a good start. And we believe the power of ownership, those owners who are both large owners and every one of us who get those little proxy statements in the mail for the stocks we own. Even if we own $5,000, we ought to be voting those proxies because companies listen to their investors.
Yeah, and this theme that you keep bringing up, this word of transparency, it's so important in this race. And I think, again, with this, without transparency, you create this huge opportunity again for greenwashing, where a company can set a net zero target for 2050, and they can kind of just join the rush of other competitors and peers that are setting similar goals and get away with it. So transparency is really important. And I think part of that, again, is transparency to your investors. But there's also that transparency to your suppliers, like you mentioned earlier, Mindy. And, Marc, this is right in your wheelhouse. You are the Chief Supply Chain Officer at Unilever. That's a huge part of your carbon footprint. Can you tell us a little bit more about how you work with suppliers to get them to decarbonize and report better data?
Yeah, thanks, Kyle. I just wanted to just pick up on one point that you and Mindy mentioned, and that is, this whole sort of your shareholders in the multi-stakeholder model, because of course they are important to us. And we have actually just launched our Climate Transition Action Plan for the first time. It's a 53-page document, and it's actually detailing how we will get to net zero and what are the actions that we will take. And we're actually putting this plan to a shareholder advisory vote at our next AGM, so that we can actually hear the feedback from our most important stakeholder, the shareholders, on how they feel about the quality of the plan, the ambition of the plan, and how we're going to deliver it. It is the most open and transparent we have ever been about our roadmap. So I'm really looking forward to the results of the vote. But getting back to suppliers, your question on suppliers, it is indeed important that the majority of your footprint actually comes not from your own operations, but either from the operations upstream, or in our case, the operations downstream. And the operations downstream actually also include, Kyle, the carbon that you basically, or the energy that you use our product. So when you wash in your washing machine with Persil, or you keep your Magnum or Ben & Jerry in the freezer, etc. And so let's say that is actually about 2/3 of the total print. And the other 1/3 is actually only a very small part in your own operation. Most of the footprint sits with our suppliers. And so one of the big things for us is to indeed, as you say, work with suppliers. We have decarbonized 70% now our own supply chain. We've committed to renewable energy by the early 2020 all around the world, that we have achieved it, not committed, but that we have achieved it. Electricity, we're now decarbonizing all of our heat processes. And it's always important to understand that your scope 3, most of the time, is someone else's scope 1 and 2. So, when you work with suppliers, as we do, for instance, we laid out very clearly what our journey was. We have asked all of our suppliers to commit to climate targets that are science-based themselves. We are also prioritizing partnerships with those suppliers that have committed to that, particularly around the innovation space. And basically, we're using our own scope 1 and 2 model that we've been running since 2008 to actually as a plug and play model for our suppliers to come on board. Now, we have a large raw material footprint, an agricultural raw material footprint, as you can imagine, in Unilever. So we're actually looking with our suppliers and our farmers who grow our ingredients to lower the footprint of the ingredients that we buy by changing the way they're grown or made. And last week, we actually launched what we called our regenerative agriculture principles, which is a guide and implementation and a toolkit for suppliers and farmers on how they can actually decarbonize. And I also wanted to mention, because maybe you say, yeah, Unilever is easy for you because you have a lot of resources in this space. There is an initiative called the Exponential Roadmap Initiative, and they have a 1.5 degree supply chain leaders hub. And within that, there's also a climate hub for SMEs, for small and medium-sized enterprises. There are incredibly clear roadmaps, playbooks, how you go about in making your decarbonization plan. Because at the end of the day, with suppliers is when you get the commitment, that's great, but people also need to understand what they need to do. And we realize that, let's say we work with 50,000 suppliers, from very large suppliers, like the same size as our own company, to much smaller suppliers. But because climate change and net zero is very binary, it's net and how big is the net, and it's zero, most people understand it now. They understand the existential threat, and they understand the concept. It's much easier, for instance, to think about net zero than it is to talk about biodiversity, because that is a much more complex concept. And so we believe that with the toolbox, with the commitments, this is actually the way to go. We've also asked our suppliers, as an example, to start reporting the carbon footprint of all the goods and services that they deliver on the actual invoice, because this will allow us to get by invoice actually what is the carbon footprint that we are buying, so that we can then start tracing what the carbon footprint of our products is.
That's fascinating. And honestly, it seems like we've gotten to this point now where it's almost like sustainability is a bargaining chip in a fully operating, functioning supply chain, right? Suppliers need to comply and start conducting business more sustainably if they want to go ahead and secure business. I think you brought up another excellent point there, which is that everyone understands what net zero is, right? But I still think that that definition of net zero is so broad, right? Because you'll have 5 companies and they'll all be aiming to achieve the same thing, which is net zero emissions. But one company will call it a carbon neutral goal. Another company will call it a climate positive goal. Someone else will call it carbon negative, and then you have net zero. So I think, again, this kind of just brings back this point of transparency and standardization and how essential it is in ensuring that, even if every company is aligned and has the same goal long term, that they make sure that they're communicating it in the right uniform way, right? So the last thing that I really want to quickly cover during this panel is around new revenue opportunities that a company can uncover by going net zero. I think we hear all the time about how net zero is good for the planet. We all know that. But if you really want to get all these private sector players on board, you need to go ahead and emphasize that net zero is a company-wide strategy, and you can actually build a whole business and new revenue streams and products around net zero. So Marc, let's really quickly hear from you about this. Unilever has created an entire line of products that are sustainable. It's given you access to new customers, and then you also have this fund as well. Can you really quickly, in 1 or 2 minutes, give us an overview of how this has unlocked new opportunities for the company?
Yeah, I mean, at the end of the day, we firmly believe at Unilever that sustainability is at the heart of good business, and it drives business, because at the end of the day, returns know many faces. And most people just think still too much as sustainability of a cost, but it really is a business opportunity that can give you a competitive advantage over time. In aggregate, Unilever's brands that are seen to be more purposeful, we have seen deliver growth more than 2 times than the rest of the portfolio. So at the end of the day, it is consumers want it. You generate more trust, you generate more, let's say, brand preference, and you generate more growth. At the end of the day, that is the business opportunity. The reason why we created the 1 billion fund it's a fund that will address climate change with projects like landscape restoration and reforestation, et cetera, and it comes back again to the same thing. It is around more trust, more brand preference, more brand growth, and less brand risk. This is a space where particularly the younger consumers, the millennials and the Generation Z, are deeply caring about climate and equality. And that as branded good companies, if you're not catering to these groups of the consumers, and by the way, all the purchasing power will be there in the next 10 years, then it becomes an existential thing. So it's very clear it is good business and not a charity or CSR.
I love the transparency there, and I think we need more companies to kind of be forward about that, right? Yeah, Mindy, what about on your end? What is Ceres doing to kind of emphasize that, again, companies can benefit from net zero, not just reduce their carbon footprint?
Great question. So first on transparency, which you mentioned. Right now, transparency is voluntary, and climate risk really is not unlike trade risk or currency risk or inflation risk. So one thing we're calling for and working hard to see happen is that the Securities and Exchange Commission should mandate the disclosure of climate risk and what companies are doing about it. That means when companies who are already filing forms with the SEC that tells the public and tells their investors or future investors what kind of risk they have, climate risk will be noted just like other material financial risks in our economy. So one thing on transparency is voluntary is good. In the EU, they're moving towards mandatory. And in the United States, both the Securities and Exchange Commission needs to do that. The Federal Reserve needs to be looking at the economic risk of climate to our economy and acting on it. As for how to integrate sustainability, you said many companies are starting to do it. They not only need to start to do it, but build it from the boardroom to the supply chain and make it metrics driven. This isn't an issue that gets dealt with on a good year, but not on a bad year. Boards need to look at risk, and they need to hold their CEOs accountable for addressing it. And they're starting to. We run a corporate board training program with the University of California at Berkeley, and it is oversubscribed every time. Boards want to understand how to act on climate risk, what to do. They should hold their CEO accountable just like they do for other things. And CEOs need to make it a priority. This is not a subject any longer for a small sustainability department. It runs to the strength of a company as it relates to their reputation, their economic viability. Being more focused on sustainability as a business imperative, what it means to every part of the business, truly is what makes businesses stronger rather than weaker. It's no longer seen as an added cost, but an imperative that every business, and certainly publicly traded businesses, have to deal with. But we've got to get it from the boardroom through to the supply chain, and transparency is crucial, which is why we're calling on the Biden administration to mandate the disclosure of climate risk at the SEC, because then we've got a level playing field. We've got everybody playing by the same rules, and the public has a right to know, as do investors.